After years of representing up to 50% of the Australian bond market, corporate bonds are set to shrink to just a quarter of the market, according to Colonial First State Head of Investments Research, Stephen Halmarick. Stephen is with us today in the studio to discuss bonds. Thanks for joining me, Stephen.
My pleasure.
Is it that there will be fewer corporate bonds or that there will be more government bonds that will change the balance?
Well, the answer to that is both. There's going to be a huge increase in the supply of Commonwealth government bonds to fund the budget deficit and infrastructure spending, and particularly a big increase also in the supply of state government bonds, some using the Commonwealth government guarantee. And at the same time, the supply of corporate bonds is really slowed to a trickle. So it's a combination of a massive increase in government supply and not much new in the way of supply of corporate.
What's behind the restructure of the government bond market?
Well, it's for the Commonwealth Government, it's basically to pay largely for the big budget deficits they're planning for the next few years. A lot of that is to do with just with the onset of the recession and big reductions in revenue, but also the big fiscal stimulus packages they've announced late last year and early this year. So issuing bonds to pay for those big budget deficits. At a state level, it's to pay for pretty large infrastructure plans for this year and the next few years.
If more bonds are released, as you've suggested, what will this do to the price and the yield of bonds?
Well, the question there is the competition for the pool of money available to be lent to bond investors, to bond borrowers. So you've got Commonwealth government, state governments and corporates, including the banks, all wanting to raise money. In the current environment, the private sector demand for credit is quite low, and so the governments are being able to borrow money without crowding out that private sector. And the government bond issues that have occurred so far have been pretty well received. I think what does concern us is maybe in 18 months to 2 years' time, when the private sector demand for credit is rising again, the economy is recovering and the private sector needs money, whether there'll be some crowding out then, that both the government sector and the private sector is trying to get the same pool of money. In that environment, you could see bond yields rise, probably steepening the yield curve and making yields rise more at the longer end. And for investors, that's really a critical time to make sure that there's not, when they're looking at the bond market, you're not worried about crowding out and yields rising, forcing the price down.
Are the government bonds 100% guaranteed?
Well, Commonwealth government bonds are guaranteed by the Commonwealth government. So they have the AAA credit rating from both Moody's and Standard & Poor's. Now we have state government bonds, some of which have taken up the offer of a Commonwealth government guarantee, New South Wales and Queensland. So they'll be issuing New South Wales and Queensland government bonds, but with the Commonwealth government guarantee, and they pay a fee for that. Western Australia and Victoria have said that they will issue state government bonds with only their state guarantee, but they're also rated AAA by the major rating agencies. And then, of course, you have the banks and all the corporate, true corporate bond issuers that are guaranteed by those institutions, and they receive different credit ratings. So there's a whole spectrum of guarantees, starting with the highest at the Commonwealth government and then moving down to the corporate sector.
In the area of corporate bonds, who is the main issuer?
Well, the vast majority is the banks, both in government guaranteed form and also in non-government guaranteed form, so on the bank's credit rating. So that's one of the other major changes, is that what we call the corporate bond market is really now basically the bank bond market, both guaranteed and non-guaranteed. And the true Australian corporates are issuing very, very little debt into the market.
As an investor, how do I go about buying bonds?
Well, the easiest way is to buy a fund. Lots of, obviously, institutions, including Colonial First State, offer funds where you can purchase diversified bond market portfolios. The stock exchange is looking at ways of trying to list some of these securities so retail investors can buy them. So that's an interesting development. Some bond issuers offer retail products. Some of the Commonwealth government and state governments, and some corporates have done that as well. But I think that, the easiest way is to through a financial advisor to buy diversified bond portfolios.
If the ASX does list bonds, is that a good thing for investors?
Well, I think if it raises the level of information available and raises the options, and people can look at bonds as an alternative investment source, I think that's a good thing. Whether those contracts, those listed bonds, become liquid or not, so I guess another question. But I think anything that raises the education level and the awareness of investing in bonds, I think, is a positive.
Are some of the government bonds going to be better value than others? For instance, Commonwealth versus state and the different states in particular?
Well, the essence there is that the state government bonds trade at a higher yield to the Commonwealth government bonds. And some states, as I mentioned, will have the Commonwealth guarantee and some won't, so it does get a little bit complex. So you would imagine that the tiering is Commonwealth government bonds have the lowest yield. New South Wales and Queensland will have a yield relatively close to that because they're issuing with the government guarantee, but they have to pay a fee for that. Then places Victoria and Western Australia will be a higher yield because they're issuing with their own guarantee. So there's a tiering of the market there. And the further away you get from explicit Commonwealth government guarantee, the slightly higher the yield will be, and investors can look for value there.
Thanks for joining me today, Stephen.
My pleasure. Thank you.